We're wrapping our coverage here at the PDAC, and joining me now is Jeff Christian, Managing Director at the research-based firm CPM Group. Jeff, good to have you back on the program.
It's always a pleasure.
So glad to have you on today, especially on a news day like today where Goldman Sachs remains bearish on gold. They're sticking to their 1100 call for the metal, saying the fundamentals just look like they're not in place. What does Jeff Christian say?
Well, I think the fundamentals are in place for gold to come back off. I don't think it's going to 1100. I don't think that Goldman is particularly well versed on the fundamentals of the market. I mean, they're primarily, I guess, an investment bank nowadays, and I don't think that their bullion department is particularly well plugged in on mine production, secondary recovery, investment demand, or fabrication demand. So, you know, their comments are pretty much static in the market.
Okay, so no impact on you, Jeff. But I guess their main, argument is that, look, data in the U.S. will get better. They're bullish on the U.S. economy. How do you see things in the country?
Well, yeah, let's not talk about Goldman. Let's talk about the reality of the gold market. We see the gold price having been driven up over the last 2 months by 4 reasons. One was the Lunar New Year behind us. Second one was the February wedding season in India behind us. The third one is some stuff going on in the COMEX, not only in gold but in other commodities. You had a very heavy roll out of the February COMEX futures contract in late January, which helped push the price up. And the fourth one is all of this uncertainty, not only about the US economy and the dollar, but also the global economy, the stock market, China, and everything else. That uncertainty is continuing. Our view is that over the next 2 quarters, as has been the case in the last 2 years, you come into the year with a lot of people, oh, the US is in a recession, China is going into a recession, Europe is in bad shape. And as you get out of the first quarter into the second quarter, people start realizing the US is not in a recession, the dollar is not collapsing, China is not in a recession, and so they back away from that fear. We expect people to back away from that fear, but not as intensely as they did in 2015 and 2014. So we look for the gold price to come off in second and third quarters, but we're looking at a base perhaps in the range of 1170, maybe as low as 1130. So we do see the price backing off before it stages a more sustainable rally beginning in the last 4 months of the year.
And do you see gold mining stocks following the price of gold?
Well, what we're seeing in the gold mining stock sector right now is that investors are differentiating. So they're looking at individual companies and they're saying, wait a second, this is a good company, it's well run, it has low cost, it's got good management, good properties, and those stocks are doing very well. And then a lot of the others are not doing well. So you've got investors having backed away from anything with the name gold in it, I'll buy, or anything in the gold name with the name gold in it, I'll sell. They're backing away from that, and they're being much more discriminating in selecting winners from losers.
So there is much more optimism at this year's PDAC compared to last year. Do you think it's merited?
I do think it's merited. You know, we've been saying for about 6 years now that we were going to go into a 3 to 5 year cyclical bear market within the context of a larger term, longer secular bull market, and we're 4 years into that 3 to 5 year period, and you're seeing signs there. So if you look back again at that fourth factor, the stock markets in China and the United States, they may not collapse the way some people still think, but they're probably not going to go back to their July highs. So you're going to see the stock market not necessarily causing people to race into gold, but similarly, it's not going to be offering them the capital appreciation that's going to distract them from gold. So, you know, our view is that the low is in December in gold, and that you will see investors continue to build their interest in gold.
Finally, I want to get some thoughts from you on palladium. We've seen a bit of movement here in this market. Is it set to take off?
I like palladium. It has stronger fundamentals than platinum. Platinum has bad fundamentals, which is good for palladium. You are seeing relatively healthy auto sales in the United States, China, and a few other countries that are very palladium-intense gasoline-powered engines. Relatively tight supplies. There is a lot of palladium out there, but there's some spot tightness that you're seeing in the market, which has contributed to the price. Again, maybe it's a little bit overheated, but I do think that from a long-term perspective, palladium prices are grossly undervalued.
Jeff, thanks for your thoughts.
Always a pleasure.
And thank you for watching our coverage here from the PDAC. Stay tuned to Kitco.com.
Come discover the world's greatest geological potential. Our potential is your opportunity.